take some household names. Apple.
Mhm.
What do you think of that stuff?
I own it. I've owned it for a long time. It's had a huge run. So if someone didn't own it today, the best professional recommendation someone would probably have is you wouldn't, if you had $100 to invest in Apple, you wouldn't invest it all today. Invest because you want to own it 10, 20, 30, 40, $50 of the $100 and wait till the stock came down. If it came down, if it didn't come down, you'd make money. So that's usually a pretty sensible way of but I think the company has, despite the fact it's run a long way in large part because the company has done unbelievable things. So there are plenty of people I respect who are saying the stock is kind of a classic blow-off in terms of it's done so well, expectations are so high for the company, you shouldn't think of owning it now. I actually don't agree with that, or I would sell it. So I guess with my actions I'm saying. And the reason for that is back to the common sense, and that's how much is the market valuing this at. If they're going to earn over $50 and the stock is under 700, 70 divided by 5 is 14 times earnings. 14 times earnings, that valuation level is a very low level for a company, any company, if you just or pedestrian. So for a company which I think still has very good prospects, it's a very low valuation. So I own it. That's why I own it.
No, I was going to ask about Facebook actually. That being said, a product that you use that you think is a great product,
right.
And Facebook now hitting 1 billion users.
Right.
I know they had a disappointing IPO. What are your thoughts about where that's going to go?
Again, back to valuation, Leanne. It's the whole point of investing is figuring out where to go in. You can buy the world's greatest company, but if you buy it at a huge price, there was something called the Nifty 50 in the 1970s where companies were at 40, 50, 60, 70 times earnings. In other words, and I just talked about Apple being 14 times earnings. Facebook is still 35, 37 times earnings. So it's still, even now, after it's come so far down from the initial public offering, it's still very expensive compared to Apple and Google. Google and Apple are trading like less than 1/2 of the valuation, if you will, of Facebook. That doesn't make sense to me.
Why is that happening?
The market's not always rational. And when it's irrational, in both directions, I think it was fair to say that a year ago, that a lot of things were priced ridiculously low, including Apple and Google. When Facebook came, it came at 100 times earnings. That doesn't make sense. And when you had Apple and Google trading at that time 12 times earnings. So for anyone who just was totally dispassionate about this, you can be dispassionate about stocks just as you can about elections. You don't have to participate emotionally. You can just say what makes sense. And if you like Obama's agenda or you like Romney's agenda, you go for that. And if you like stocks that are trading at 100 times because you think they'll trade at 200, it just doesn't make sense for me. But dispassionately, you say, here's something that's a really attractive property. Think of it as real estate, and it's trading at 1/10 or 1/12 of what this thing across the street is trading. It doesn't make sense. So it's just their numbers.
Right.
It's fashioned in part, in a sense, that Facebook. Let's take a couple of unfashionable stocks. One of which I know you at least own in Holland Balance Fund when I last looked.
Because I'm unfashionable?
No. Because you believe in real companies. Microsoft.
Yep.
Why do you still like that?
It's still one of the world's strongest franchises. They still have a very good business which throws off a mountain of cash flow, and it's trading at a very low valuation. I always start with valuation. And I think to own a great company at a fair price, as Warren Buffett says, is always an attractive thing to do, as opposed to owning a fair company at a great price.
Hewlett-Packard lost $4 billion in market value yesterday because Meg Whitman said their prospects for the next couple of years are grim in almost every product line. Would you look at this as a bottom fisher or something that's even though it's a huge company, in a death spiral?
When I buy stocks, I buy a stock because I think you can make money, not because it's really cheap. Sometimes the biggest mistakes I've made, let's talk about that, that's a better way to look at it. The biggest mistakes I've made have been trying to do things like that. And there are cliches about it's like catching a falling sword, but the reality is that in a case like Hewlett-Packard, there's such a long history of defeat and disappointment, going all the way back to their original purchase of when they bought Compaq Computer. That was a ridiculously bad acquisition. That's just, I hated it at the time. I used to own Hewlett Packard back in the day before that. And when they did it, it's like, what is the board thinking? And then you just pile on acquisition after acquisition. You know, these are, and then you go through the people who've run the company. It's like a rogues gallery. And this is actually, I don't know any of the people on the board. I probably should take a look. But it's one of the worst board series of actions I've ever seen in an American company, in any company.
So board governance matters.
Oh yeah, well, take a look at Hewlett Packard, a great example. Because what they've approved over the years in terms of acquisitions, huge acquisitions, which were billed as transformative, they were transformative. They transformed the company into a crummier company. And then on top of that, they brought in CEOs who made no sense. Mr. Apotheker, anyone remember him?
Yeah, yeah.